Hi, this is Kim Watson. Welcome to this week's Big Picture. In this video, I'm literally going to cover the pound dollar, and the answer to the question that I've been asked is what is going to be next for the pound dollar, or the pound really. I'm covering the pound dollar because that's the chart I'm looking at the moment, but how is the pound going to stand up against its the other majors? So firstly, technically we've popped in, we pushed up on last Thursday 10:30 or 10 o'clock even on the exit polls. It pushed up and made this new high here. Now when it did so, it then with the results coming out, it did not push any further, and to me that's quite important in terms of how I'm looking at this, and certainly was on Friday morning, because I shorted the Friday morning movement. Because well, there was an opportunity. It wasn't a massive move, but I wasn't looking for a major sell-off at that point, but I am questioning the pound's potential to push on any further. Question being, of course, that was the 10 o'clock news. Thereafter, on confirmation, it didn't go any higher, so that suggests, well, there is potential that it hit a ceiling, and it was key ceiling, quite a long way up compared to where it's been sitting. It was back in, well, way back in 2018 when it was as high as it ran into. There is resistance levels running across these areas, which you could argue, if you put lines across there, well, it ran into that resistance, ran through it a little bit, and has got the potential to roll. So let's have a look at the risk events this week and what may affect the pound in the near term and running into early next year. So the risk events for this year, this week, is the main one at the moment is the Bank of England meeting. Now last time the Bank of England voted 7-2 or 2-7, whichever way we want to look at it. Two people for the first time in a long time voted to cut rates. Now so there was two, and up until now it's been 900 or 009 in the right layout, but last meeting in front, right before the general election, which is unusual, there were some dissenters, two dissenters there wanting to cut rates. Why do they want to cut rates? Well, we need to look at, if I can pick it up here, we need to look at the numbers that have been coming through. Now let's say this is December. Let's just run back to last month. If I can click on here and get a last month and scroll through it. It's not going to give me at the moment. Let's just do it with a different mouse. November. It is November. Right, it's already there. It's flicked. Right, okay, so just scrolling through. So final manufacturing from October running into November was 49.6, was better than its forecast, but it wasn't above the 50 area. So that's still contracting. Services in line, well, bang on, just on the 50 line there, but it's marginal positive. There was the voting, 2 votes against. Rates stayed the same. Then came the GDP. GDP is down on the quarterly basis. GDP here. Manufacturing, production. These are the figures that have been dropping off. Average earnings dropping off, 3.6 versus 3.8. This isn't normally an inflationary number. It's dropping. The inflation itself dropped 1.5. Retail sales negative, minus 0.1. Yeah, sure, that might pick up in December, but how it will tie into normal years, we'll see. Then the flash manufacturing data came out in November there. 48.3, 48.6, both negative figures. So it's all negative at that point. Then let's have a look at this month. On this month, there we go. And on this month so far, we've had the manufacturing data, final manufacturing data came out. We saw the flash, we've seen the finals here, still it's marginally better but negative. Services marginally better but negative. It's actually dropped, so it was 50 the previous in actual. Looking then at actually it was 50, was it? No, it wasn't. I was just looking to see if it was recalculated, but anyway, still negative. GDP, this is the monthly GDP, negative, missing on target. Manufacturing production rose a little, but just tiny amounts. Then we've had the flash manufacturing out this morning, both negative figures. Flash and services, both negative figures, both contracting. So what we with the MPC meeting, I wouldn't be surprised if they talk about a cut in the nearer term. It may not happen on this time. The votes may still stay as they are, or they may even move slightly. So this effectively, as I said, is the big risk event for this week. Before then, we have got Carney speaking due tomorrow. So we got him speaking average earnings tomorrow. This would be an important number to be watching for, and so leading in to the Bank of England, which is the major data, and then Friday not very much there really, although we'll have a speaker coming in through onto Friday. So we've got MPC members speaking on Friday. So stress tests are all out of the way, they're fine, there's no problems there. As I say, the problem is growth, and it could well be sitting there as a a cloud. That's the word. Talking of clouds, I'm going to just run onto a daily chart. I'm going to drag in some analysis that I occasionally look at. It's some bankers like to work with this sort of type of analysis. It's Ichimoku cloud, and it's just running into the underside. Now, this is a bit of a resistance. This is a monthly view of the pound there. It's just run into the underside there. I just thought I'd just drop that in because it's another factor in sort of thinking, well, where's the resistance coming from here? Well, yep, we've got potential, but anything pushing above these sort of levels could be quite jumpy, bitty, choppy, and slow. We could end up in the past when we run through these sort of periods. We have a month up, month down, month up, month down. It gets very choppy, and the pound can be quite rangy. Let's have a look at the outlook for the pound in terms of I say the outlook for the pound. What's coming up? Well, this Friday, I think it could be. I say Friday could be quiet. Sorry, I can't write very well with this mousy thingy. But on Friday, we've got Parliament's starting back tomorrow. 2 days of swearing in. Thursday we'll probably set an agenda. Friday may be the vote on seeing through Brexit. Now, of course, this is the initial agreement that based on what Boris has already agreed, so that's fine. But then they start talking about trade agreement, and that starts, well, as soon as after the 30th, 31st of January, whichever it is. But at that point, then the talks begin. They are the complete unknown. So whether we'll see the pound rallying up completely, it may be one of these sort of up a bit, down a bit, up and down, as sort of comments start coming out there. I don't expect it to be a quick thing. Looking at previous attempts by countries like Canada, etc. But we are a major trading partner, and there may be more potential. Whether it will be done in a year is another matter. But it may be quite at the initial points. So where we left then? We're left here then. In summary of what's going on, we've got a top in here which has not been exceeded since the news was confirmed, so that's a little bit puzzling and almost downish side of things. Sentiment wise, well, we've got retail traders which are bullish. Well, 58% of them. That's not major, but that's flat to erring to the downside for me. The big money is has been pushing up. Whether that would just flatten out a little bit, that's been pushing up since back here in August. That changed tact in August. We saw a low in August, and then since then the asset fund money has been pushing in, and it's come back into a neutral to, well, just over into a more positive position with the pound. So the big money's gone neutral. So sentiment is okay, but it doesn't mean to say it's going to continue into a massively bullish point, but it has crossed the zero area, so we could see a continuation potentially. Following on from that, of course, we've got this week's meeting, and we've got Bank of England meeting, and to me that's quite bearish in terms of the outlook, in terms of the growth, etc. So we're still sitting in here. There's not a lot of green shoots in the economy at the moment. There's some positivity in terms of at least the government will be able to make decisions and get them voted through Parliament and made law. But aside of that, it's of this area where we obviously always at these sort of stages you can say, well, one or two things. Well, actually one of three things can happen. Will it push up, or we need something significant to do so? A bullish term from Carney, etc., coming out may see it run back towards those highs. And we could push up. Some of the central banks, some of the major banks, I saw Barclays, for example, looking at 1.4 as a ceiling. They've raised their ceiling to about 1.4 with the pound. I think it could be a bit of a ceiling at the moment, as I said, because of the fact it hasn't pushed through. Realistically, we could end up in a chop zone, and I think that's a ranging trade, a ranging movement, which could still sit, sort of come back in or stay within this range. But say the sort of daily 50 through to these prior highs there, somewhere in that range could be the position. If we see a cut made, I think it might surprise the market a little bit. Rates were looking, if you look back at the bring the chart back up here if we can, let's get rid of the pen for a moment, and the expectations is for it to be left alone. So any cut would see that the pound drop off quite surprisingly quickly, I should imagine. But maybe just back to some highs here, as I say, maybe range bound. For it to be a bigger sell-off, well, then maybe Carney will have to do his best at being negative. Okay, that's pretty much it. So cloudy. Cloudy with a chance of hell. Okay, so I wish you a great week. I'll be back next week, maybe for a wrap up before Christmas. Probably not. If I don't, well, wish you all a very happy Christmas. Bye for now.